But here's an important story, right? Hospital stocks we've been discussing for the last many weeks now. And earlier on Top 10, we put out information that the Health Ministry is against a one-size-fits-all approach to standardizing the cost of medical procedures across the country. Hospital after hospital, of course, has come on programs over the last 2 weeks and basically told us the same thing, that it perhaps is a little impractical. Sources say that the ministry favors imposing a different price cap for different states. The Supreme Court's 6-week deadline expires on the 11th of April. However, consultations are yet to begin. Aditya Khemka is fund manager at Intred Healthcare Portfolio PMS. He's joining us right now to discuss this. Aditya, good morning. Good to have you with us here. Thanks very much. Is this one of those typical buying opportunities in hospital sectors, or you think it's more complicated than that?
No, I think you're right. I mean, it is sort of a buying opportunity for, hospital stocks. But having said that, I would also qualify my comment by saying that not all hospitals are trading at similar valuation multiples. So one needs to be very wary of, what they buy. I think certain hospital stocks had gone, very high in terms of valuations. And even after this correction, they remain fairly elevated in terms of valuation multiples. So one would do well to avoid those stocks. And some other hospital stocks which had, good business models, but still good valuations, have corrected somewhat. So they make a very compelling investment case today.
Okay. Aditya, hi, good morning. So the thing is that what we picked up from sources is that the government is not looking to have a one India, one price approach to, medical services and treatment. But we all have to remember that this is subject to ultimately what the Supreme Court says, right? And it's clear that some sort of pricing discipline or some sort of caps are perhaps on their way. So given that and combined with what you just mentioned on valuations, which are the stocks that are now out of your valuation comfort zone and which are the ones that perhaps still make an interesting case?
So look, we at the Intred Healthcare Portfolio, historically, we used to own Max Healthcare. We booked profits because we thought the stock went through the roof in terms of valuations. We currently own Healthcare Global. And we used to own Aster DM Healthcare, but we also book profits there at a particular price. So clearly, the valuation comfort in majority of the large hospital chains doesn't exist today in our estimate. But the smaller hospital chains do offer some value, but there also we are selective, not across the board. And I think government may want to or may not want to regulate prices. Remember, historically, they have regulated product prices. So in healthcare, product pricing control is a center subject. Service pricing control is a state subject. So if you look at it in the past, the government has regulated the prices of stents, kneecaps, and that has impacted margins. They've also regulated prices of certain drugs in the hospital chains. And that has impacted margins, but the hospitals have bounced back, because they have repriced their other services and etc. So if there is any regulation to become, I think it will come state-wise because only states have the power to do this. And as most hospital entrepreneurs are already telling you, it is not a one-size-fits-all industry, simply because there are different kind of services, different level of procedures, and different kind of doctors, dealing in each of these hospitals. So you can't really price everything with the same band. So I think that's where the problem really lies.
Sure. Aditya, just to get the numbers on the table for our viewers, what would you say is a reasonable valuation band for hospital companies? And how much above this band are they currently trading at least the big ones, the top ones?
So, I don't use the popular valuation multiples of EV, EBITDA, price to earnings. We actually use a very unpopular valuation multiple, which is operating cash flow yield. It is essentially the operating cash flow of the company divided by the enterprise value of the company, which is market cap plus debt. So operating cash flow yield-wise, we are comfortable with anything 3% and above. But some of the large chain hospitals today trade at 1.5% or 2% operating cash flow yield, which effectively implies that the stocks need to correct anywhere between 30 to 40%, the larger ones, to come to our comfort levels of valuations. Whereas some of the smaller hospital chains are trading at 4, 5, 6% operating cash flow yield. So they are already within our valuation comforts.
Aditya, we'll leave it there. Good conversation as always. Thank you very much for joining us, and it's a pleasure having you here on CNBC TV 18. So that's, hospitals in focus and what has happened there.